Although we do truly cherish providing products and services that our customers need, there is nothing quite as satisfying as receiving payments for those goods and services. It's easy to do from a couple of different places. In QuickBooks, we're going to choose to access the home screen. Come down right about the middle of that screen and click or tap the Receive Payments icon. This, of course, displays the Receive Payments or Customer Payments window. The first thing we need to do, of course, is designate from which customer we're receiving the payment. This is available from the list on the top left of the screen. We can then enter a payment amount, which in this case is $1,578.81. It's also important to designate the actual date we receive the payment, even though we may not process it the same day, but I find generally in business we usually process payments fairly quickly. A couple of points before we move on about receiving payments. First of all, we can use this same window whether payments are made in full or they're just partial payments. If payments are made for more than one job, what we want to do is choose the customer name, not a specific job. Then we'll be able to designate the specific jobs down below. Also, if the invoice payment should be applied does not show up, then we might want to make sure that we've selected the right customer and not a specific job. If it still doesn't show up, then we may have to go through a little bit of sleuthing to track down the invoice. Sometimes an invoice has been improperly applied to a different customer. So these things, of course, would need to be fixed in the original sales documents. Another thing to consider at this point is this is where the income tracker can be a little bit more easy because all of these things would have already been applied if we were receiving a full payment. Just something to think about. Now, once we get this part of the information taken care of, the next thing we need to do is designate the method of payment. If they're paying cash, then we can put in a reference number if we've provided them with a cash receipt. If we do a check, then of course the check number would be helpful. If we do a credit or debit card, then we're going to be prompted to fill in information related to that card, including which card was used, the card number, and the expiration date. We'll go ahead and say that this was paid by a traditional old-fashioned check, and we'll put in the appropriate check number. Now we need to start working with what this payment is for. We can see that the customer balance is $1,628.81. As we move down, we can see all of the open invoices. And in this case, there's only one invoice, and it is the same amount that is currently outstanding. QuickBooks is automatically going to look for matching amounts. So if there were multiple invoices open, it would find the invoice that the amount paid matched most closely. If it did not find one, then it would automatically apply the payment to the oldest outstanding invoice. In this particular case, there is only one invoice, so it's not a big deal. Notice, of course, that we can manually apply different amounts to different invoices as well. Now, as we come down to the bottom of the screen, what we see is the total outstanding and the amount of the payment. Again, it's going to do the math and show us the amount due, the amount applied, and then there's a space for discounts and credits applied. What we can see if we look to the left is that this particular customer does have a $50 available credit. And unless they've instructed us otherwise, we want to go ahead and apply that credit. We do that by looking all the way up at the top of the screen where there are a lot of very useful tools, one of which is the Discounts and Credits button. If we give this a click, it's going to open the window that displays all of the discounts or credits that are available for this particular customer. In this case, we're going to use the $50 credit that's available. We're going to use the full amount. We can see the math as it applies to this particular transaction up on the top, and all we really need to do at this point is click or tap Done. We can see that the available credits has now been zeroed out and that the $50 credit appears on the right side of the screen. We can also see that the credits column has been applied at the top so we can keep track of where all of our numbers are coming from. We can also see that everything is now balanced for the total amount due. If the payment amount is different than the amounts that we've designated for one or more invoices, we will need to balance it. QuickBooks will show us either an overpayment or underpayment message if that is appropriate. Now, we're almost done and ready to process this, but we also wanted to take a look at the top of the screen. There are a variety of reports that we can produce as we're receiving payments if we have questions about what the activity is for a particular customer, including being able to look at a quick report, the transaction history, and all of the open invoices. Back on the main menu, we have another option that in the past was a challenge. It was hard to document receipt of payments from our customers with our customers. And by that, what we can see is that we now have the ability to both print a customer payment receipt as well as email it directly. Emailing was probably the most requested feature that people wanted to have. Don't give us a piece of paper. Don't make me wait for something in the mail. But when you receive a payment, go ahead and email me a copy. That feature was actually introduced in the last version of QuickBooks 2014, and it certainly is nice. Now, the way that this particular company file is set up, all of our funds are going to go into an account called undeposited funds, so we can go ahead and make a deposit with them. If that was not set up in your company file, you would actually have an option to designate which bank account you wanted this to go into, or you could select undeposited funds from the dropdown as well. It's hard to say whether you remember the days when we actually used a paid stamp. It was usually a red ink, and we could stamp hard copies of bills or invoices when they had actually been paid. The modern version of this is the paid date stamp that QuickBooks provides, which marks invoices as paid. Let's just take a quick look and see how that's applied by opening up our invoices. We'll click or tap Create Invoices on the home screen, and we'll move to the upper left corner and go back so we can see the invoice for which we just received payment. And here we can see the paid stamp directly below the invoice title. We'll go ahead and close this and get back to our last little bit of business. Let's move up to the banking menu and select Make Deposits. Now, before we go on, I think we need to go through just a little bit of accounting. When we create an invoice, QuickBooks increases our income account and decreases our accounts receivable because we sold something, but the customer owes us money for it still. When we receive payments and place them into undeposited funds, QuickBooks decreases the accounts receivable because the customer's balance is paid off, and QuickBooks also increases the undeposited funds account balance, which is basically what we're seeing here. This is where the money is sitting. As we've learned, there's always a yin to the yang, a positive to the negative, or a credit to the debit when it comes to accounting. Now, when we make deposits, QuickBooks is going to decrease the undeposited funds account because the monies are being removed from there, and it's going to increase the appropriate bank account by the amount of the deposit. From this screen, we can choose specific types of payment methods, and we can also sort them by different criteria. What we see listed is what we can choose to deposit, and we can either select all of them or we can select one or more. When we have selected the payments we want to choose, it'll give us some summary information at the bottom, and we simply click or tap OK. Now, the second part is to designate where we're going to deposit this money. In the Make Deposit window that appears, we can select any one of our accounts that we have available in our chart of accounts. We're going to choose our good old checking account. We also want to make sure that the date of the deposit is accurate. It may or may not be today. Maybe we're processing it today, but we're not going to physically deposit it until tomorrow. The memo by default will say deposit, but we could put more information here. For example, if we wanted to say the client or the job that the deposit was from, that memo becomes more visible and possibly more useful in other windows and reports. Of course, all of the different items that we are choosing to deposit together will be listed here, and it's going to give us the subtotal. If we choose to want cash back, then we can go ahead and designate an amount, but we also have to designate an account. I do have my own opinions on this, but my preference is to always deposit 100% of the monies received into a bank account, and then, if we need cash back, to make a separate withdrawal. This way, our deposits always match the monies we received. And if we were ever to be audited, it's much easier to be able to say all of our monies that we ever received honestly went into the bank account, and there's no question about what funds or income we had. With that said, if we get cash back, we have to put that into an account, and it's often going to be petty cash. We can put a memo, for example, if we need some travel expenses, and then we can enter how much cash back we want. QuickBooks will then adjust the amount of the deposit, and we, once again, click Save and Close. With that, we have completed our accounts receivable process. We've received money for goods and services we sold to our customers. That money has been deposited and properly recorded in QuickBooks, and it's in the bank. It is, and it should be, a very good feeling.